I think that there is a limit to monetary policy move, and that's why the market's response to the seismic monetary policy moves that we've seen over the last 2 weeks have been a bit of a, inducing volatility than more than anything else in a relief rally. We may see a relief turnaround today, we may not, because at the end of the day, resources are real money in terms of helping those in need. And I don't think that is something that the central bank can do very, very quickly unless some sort of a helicopter money is being contemplated.
And before we get to that, because I do want to get your thoughts on the prospect of helicopter money, but I just want to bring up U.S. Treasuries again, because we are seeing buying into U.S. Treasuries, yields moving lower, which is somewhat different from what we had seen in parts of the equity sell-off last week. So would this be reassuring to the Fed as they try to address these financial strains in the market?
So I think from a technical markets perspective, that was a very big source of concern last week, because we saw a big rise in correlation between selling off of both bonds and equities. Right. You don't want that to happen, because that leads to a lot of these funds that sort of hedge themselves automatically whenever equity markets sell off to actually incur spiraling losses. So from that perspective, yes, I think what is happening this weekend is a good thing. But mind you, what you really want the markets to respond at the end of a very large easing measure is a bull steepening. You're generating inflation expectations and growth expectations down the road. That is certainly not happening.
That is certainly not happening. What is right now the most important thing that the market requires to, to allay the concerns of the investors? Because at the end of the day, if you've tried fiscal policy, you've tried monetary policy, and it's failing to appease investors, it's failing to calm down the markets, what will work?
Strong, competent, and coordinated global policy response on the fiscal. We are absolutely not seeing that. I think in terms of monetary policy coordination, for the first time this morning, we saw central bank swap lines being talked about. But beyond that, the Fed did the 50 basis point cut after a G7 communique. Nobody followed through. In terms of global fiscal coordination, the only thing that I've seen is China helping countries out with masks and other devices sending to Italy and so on. But where is the clarion call for global cooperation on the health side, on the fiscal side, to help the needy?
So when you're saying coordinated fiscal policy action, it's really coordinated healthcare policy action across economies, across countries.
Well, beyond that, I mean, if indeed we see, just like 2008, 2009, trade credits easing up, you need a multilateral and globally coordinated action, not just each country doing
Taimur,
the best.
in terms of fiscal policy reactions, we had an enormous announcement coming from Germany in the way of their own fiscal package intentions, in a country that people are always quite skeptical of their willingness to go beyond even constitutional requirements here. And Germany is essentially saying whatever it takes as well.
Right, but in the case of Europe, for example, I would like to hear from at the EU level. I'd like to know whatever happened to that ESM that we had, spent a lot of energy setting up over the last decade, and why is that not being used to purchase assets if they're selling off?
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.